Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings so you don't have to. Today we're diving into Liberty Media Corporation's latest 10K report, and let me tell you, it's a wild ride with more twists and turns than one of their Formula One races. Get ready for some financial jargon demystification, a peek at potential split-offs, and maybe even a surprise or two. So what's Liberty Media all about? Well, they're big players in the media and entertainment world, with their main attractions being Formula One and a piece of Live Nation, the giant concert promoter. But things have been changing with some major split-offs, like SiriusXM and the Atlanta Braves. It's like watching a race car get disassembled and reconfigured mid-track. One of the biggest moves lately was spinning off Liberty SiriusXM holdings. Basically, they took their SiriusXM holdings and created a separate, independent public company. This means Liberty no longer directly controls SiriusXM, but it did get some cash in the process. It's like selling a prized possession to free up some capital. This is seen as a discontinued operation, meaning it's not part of their ongoing business anymore. But wait, there's more. They've also announced plans to spin off the Liberty Live Group. This is like a sequel to the SiriusXM move, creating yet another independent company. Liberty Live Group holds their interest in Live Nation and some other assets. If all goes according to plan, Liberty Live Holdings Inc. will be its own publicly traded company. This will give Liberty the opportunity to get rid of their tracking stock structure. This is planned for the second half of next year, subject to shareholder approval and a thumbs up from tax advisors. Oh, and hold on to your helmets because there's a potential acquisition in the mix. Liberty Media is trying to buy Dorna Sports, which runs MotoGP, another major motorcycle racing series. It's a big deal worth around 3 billion euros, but it has hit a bump in the road. The European Commission is conducting an investigation which pushed the timeline. Liberty even had to pay extra to keep the deal alive. Let's talk money, shall we? The report mentions the total value of Liberty Media's stock held by non-company folks was about $25.8 billion as of June last year. It's a big number showing that there's significant value in the company, even with all the moving parts. Zooming in on Formula One, their primary revenue streams come from three main sources. Race promotion fees are paid by the race organizers, media rights are generated by licensing broadcasting rights, and sponsorships come from companies advertising at the races and partnering with Formula One. It's a complex web of deals that keep the engines roaring, with most contracts having built-in fee increases each year. On the other hand, their concerts division operates through its sponsorship and advertising segment and experiences higher revenue in the second and third quarters due to the seasonal nature of shows at its outdoor amphitheaters and festivals, which primarily occur from May through October. Revenue is generally impacted by the number of events, volume of ticket sales, and ticket prices. Of course, there are risks involved. The report highlights that Liberty has about $1.7 billion in debt at the corporate level. This debt could make it harder for them to grow or react to changes in the economy. They also depend on the popularity of their businesses and the willingness of consumers to spend money on live events. If the economy hits a rough patch, people might cut back on entertainment, which would hurt their bottom line. And like any modern company, cybersecurity is a major worry. They're subject to computer hacking, theft, computer viruses, ransomware, worms, or other destructive software that could disrupt our services, misappropriation, misuse, alteration, theft, loss, leakage, falsification, and accidental or premature release or improper disclosure of confidential or other information. Something else that might spook investors is tax liabilities. If the IRS decides the Liberty SiriusXM Holdings split-off wasn't tax-free, it could create a major headache for Liberty. In that case, the company would be required to pay huge taxes and also former holders of Liberty SiriusXM common stock. What are the plans for the future? Well, Formula One wants to grow its global fan base and make more money from its commercial rights. This means getting better deals for race slots, expanding their media reach, including their streaming service, and attracting more sponsors with exclusive deals. They also want to make the sport more sustainable and inclusive. Basically, they want to keep the races exciting and entertaining while also being responsible corporate citizens. Alright, let's peek at some financial numbers. As of the end of last year, they have $2.6 billion in cash associated with Formula One and another $325 million associated with the Liberty Live Group. This cash is used for capital expenditures, investment and debt payments, and potential share buybacks. It's important to maintain a healthy balance sheet and cash flow so these types of companies can continue to make strategic investments in their future growth. Drilling into the numbers some more, Formula One's revenue increased 197 million year over year, primarily driven by media rights, race promotion, and sponsorship revenue. On the cost side, team payments increased as well due to higher revenues, and there were greater commissions with additional revenue streams. There's also the risk of potential conflicts of interest because Liberty has interlocking directors with other public companies. These are instances when their interests do not align with those of the company. There's also a lot of ways that the stock could underperform based on what the board decides. Investors in tracking stock can lose out if one tracking group benefits at another's expense or the board decides to favor some stockholders over others. And even in the event of liquidation, you might not get what you expect. Lastly, Liberty can sell off pieces of the company without shareholder approval. They also may split off, spin off, or reattribute assets and liabilities. There are a lot of ways that the company can move and shake and impact investors that might not be very transparent. So what's my take on all this? Liberty Media is trying to streamline its operations by spinning off some of its businesses. The problem is that it faces significant execution risk in pulling off these transactions and maintaining performance in key segments like Formula One, while the consumer landscape and regulations change at an increasing pace. The Dorna acquisition could be a major win, but it's currently in regulatory limbo. Investors need to decide if they trust the management team to navigate these changes and create long-term value. That's all for today's Corporate Decoder. If you found this breakdown helpful, give us a like, subscribe, and let us know what companies you want us to decode next. Thanks for watching.